$44.8 billion for a spice rack.
They just paid a software multiple for garlic powder. I'm terrified.
Oh, come on, it's a brilliant margin play. The M&A winter is officially dead. Megadeals are up 319%.
Fine, the deal makers are awake, but I'm way more fascinated by Ben Affleck quietly selling an AI startup to Netflix.
Wait, really? Batman is doing tech exits now?
We've got a very weird board to clear today. The rundown.
I just want to know if Danone is paying the 1 billion euros in cash or in powdered meals.
Honestly, at a €1 billion valuation for Huel, they should be paying in pure marketing hype. But yes, Danone actually snapped them up.
The Idris Elba premium is real. Stringer Bell sells meal replacements now.
He does. Though I looked at the footnotes and Huel's margins are surprisingly solid for direct-to-consumer nutrition. Danone needs that younger demographic desperately.
They are not the only ones writing massive checks this week. The M&A winter is officially over. We are back in the sunshine.
That really depends on your definition of winter.
My definition is the data, Maya. Deal values for transactions over $1 billion are up 319% year over year. 319.
Sure, but look at who is buying. You have Lupin picking up European pharma asset VISUfarma and Antin Infrastructure buying Sapphire Gas from Apollo.
Good solid deals.
But it is mostly private equity firms forced to aggressively deploy capital. Their LPs are breathing down their necks. They are just trying to clear the dry powder.
Oh, come on. Financing conditions are finally cooperating. That is the real catalyst. That and everyone being terrified of missing out on the tech race. Speaking of which, did you see the Netflix leak?
Ben Affleck quietly offloading his AI post-production startup to them? Yes. I love a stealth Hollywood tech exit.
And Uber is apparently circling Black Lane, which makes zero sense to me. Uber already has Uber Black. Why buy a luxury chauffeur service?
Because Black Lane actually owns the high-end corporate travel market in Europe. Uber has been trying to crack that for 5 years and failing. You look at their quarterly spend on European enterprise growth, it is a black hole. Sometimes it is cheaper to just buy the winner.
Spoken like a true banker, I'm so proud.
Don't ruin it. I just read the balance sheets. It is the same reason Intel just dropped $14.2 billion to buy back that 49% stake in their Ireland Fab joint venture. Pure strategic course correction.
Exactly. Big checks are flying everywhere. Which brings us to the actual elephant in the room today.
The $44.8 billion elephant.
Unilever is swallowing McCormick. I need to know how you value a global monopoly on garlic powder. The big one.
319%. That's the year-over-year jump in deal values for transactions over $1 billion. The M&A winter is dead, Nate.
It's dead, buried, and currently being leveraged for a buyout. And nothing screams we are back quite like a $44.8 billion grocery aisle consolidation.
Unilever and McCormick. I read the press release 3 times this morning trying to figure out who actually called who first.
Oh, Unilever absolutely made the call. It's a classic banker pitch. You have Unilever's food arm, which has been sleepwalking for years, and you bolt it onto the undisputed king of the spice rack. It gives them massive pricing power.
I don't buy the pricing power narrative. Look at the structure here. They're combining the food arm with McCormick. This isn't a growth play. This is Unilever trying to hide their flatlining mayonnaise margins behind premium vanilla extract.
You're being way too cynical. Think about the shelf space. When you control the mustard, the bouillon, and literally every seasoning in the pantry, the grocery store bows to you. It's a brilliant defensive moat.
Defensive? Yes. Brilliant? For nearly $45 billion? That valuation implies they're going to invent a new primary flavor. The premium is absurd.
They're paying for certainty. Financing conditions are finally easing up. Industry watchers are literally screaming about how fierce the competition is right now. Private equity is aggressively hunting to take public companies private. Unilever knew if they didn't swallow McCormick, a sponsor would have pounced.
Well, the sponsors are definitely busy. Apollo just flipped Sapphire Gas to Antin, but I'll give you the financing angle. The money printer is warming up again. Speaking of massive checks, can we talk about Intel quietly dropping $14.2 billion to buy back a 49% stake in their own island fab joint venture?
My absolute favorite kind of deal. That we changed our minds transaction.
Exactly. They sold that stake when cash was tight, and now they're buying it back at a premium. The footnotes on that one are basically just an apology letter to shareholders.
It's the cost of the AI arms race. Everyone's scrambling to secure their own supply chains. But honestly, my favorite consumer deal this week wasn't even the Unilever mammoth.
Please tell me you're looking at the Danone deal.
1 billion euros for Huel. Danone just bought powdered nutrition from Idris Elba.
I saw that. I genuinely want to know if Idris Elba was in the data room, just reviewing EBITDA multiples between takes.
I'd pay good money oasis. So the analysts are officially calling it. Quote, the M&A winter is over. Deal values for transactions over 1 billion are up 319% year over year.
I read that note. 319% sounds incredible until you remember the baseline. Last year was an absolute graveyard. If you go from 2 megadeals to 8, you get a massive percentage jump. It is just base effect math, Nate.
Oh, come on. You can't just math away $45 billion. Unilever swallowing McCormick is a massive market signal. That deal alone is $44.8 billion. Add Intel dropping $14.2 billion to buy back its Ireland fab. And you have to admit the frost is thawing.
It is a highly concentrated thaw. The second quote in that report claims private equity is aggressively deploying capital because of better financing and AI fear. Are they? Because Apollo just sold Sapphire Gas to Antin. They are exiting, not just buying.
But the financing window is genuinely open again. And it is not just the mega cap corporate stuff. Danone just bought Huel for 1 billion euros.
Wait, Huel? The meal replacement powder? Isn't Idris Elba an investor in that?
He is. Stringer Bell just got a very nice liquidity event.
That is actually hilarious. Speaking of celebrity crossovers, did you see the filing on Ben Affleck's AI post-production startup?
Batman had an AI startup?
Had. He just quietly offloaded it to Netflix. The purchase price is buried, but Netflix is clearly hoarding post-production tech.
See, the winter's over. Even Hollywood is doing tech deals. We have beauty giants talking Megadeals too, with Estee Lauder and Puig deep in negotiations.
A predominantly stock-based merger in beauty is just a polite way of saying neither side wants to borrow cash at current rates.
Always the cynic.
I prefer data realist, but if you want to talk about actual cash changing hands, we need to look at what is expiring tomorrow. Gilead is totally down to the wire. Spill the tea.
I'm telling you, the Hollywood tech hustle is getting completely out of hand. Ben Affleck just quietly flipped his AI post-production startup to Netflix.
Wait, Ben Affleck had an AI startup?
Exactly, since, when is Batman training large language models? But apparently it is a real platform. Netflix scooped it up totally under the radar.
I need to see the term sheet on that. I guarantee you this is a talent acquisition masked as a tech play. Netflix wants his production company's output, and buying this supposed AI startup was just the sweetener to keep him happy.
Oh, come on, you are so cynical. AI is the magic word right now, just like celebrity investors. Look at Danone paying 1 billion euros for Huel this week. Idris Elba backs it, and suddenly a protein powder is a unicorn.
I have to stop you there. Danone did not pay 1 billion euros for Idris Elba. Huel has massive recurring revenue from tech bros drinking liquid meals. The celebrity dust is just marketing. That valuation is purely based on their direct-to-consumer retention rates.
Spoken like a true skeptic? Fine. You want real corporate drama? The rumor mill says Estee Lauder and Puig are deep in talks for a massive merger, and it is almost entirely stock-based.
Now that is actually smart. Puig just went public recently. A stock-for-stock beauty mega merger makes total sense right now. Analysts are saying mega deals over $1 billion are up 319% year over year. The M&A winter is officially over.
Everyone is shopping. Even Uber is supposedly circling Blacklane, trying to buy their way into the luxury chauffeur game.
Which is wild because Uber was supposed to kill the traditional black car service. not acquire it. But if we are talking about massive consumer shopping sprees, we need to talk about the spice aisle. Because Unilever just dropped $45 billion, and I have a lot of thoughts on those footnotes. Tomorrow's radar? Tomorrow is all about the clock running out on Gilead. Their extended tender offer for Arcellx expires, and I want to see if they actually hit the threshold.
They will. My eyes are on London. Apollo is trying to close that Gatehouse Living deal before the weekend. Private equity loves a Friday wire transfer.
True, though the real Friday gossip is Uber. Rumor has it they are circling Blacklane.
Brilliant move. Uber dominating the luxury chauffeur space makes perfect strategic sense. It is the natural evolution of Uber Black.
Oh, come on. It is a total vanity play. Margins on white glove services are terrible compared to their core network. They are just buying prestige.
Prestige pays when you want corporate accounts. Speaking of prestige, did you see Ben Affleck quietly sold his AI post-production startup to Netflix?
Wait, really? Batman had an AI startup?
He did. Goodwill hunting algorithms, apparently.
I need to pull those Delaware filings immediately.
Do that. While Maya digs through Affleck's cap table, we have to talk about the spice aisle. There's a $45 billion elephant in the grocery store.